Daily Mortgage Rates Live with the Mortgage Calculator. My name is Nick Hiersche. I'm the president and founder of the Mortgage Calculator. We are a lender that specializes in non-QM and non-traditional financing, as well as all your conventional FHA, VA, USDA, and standard programs. But we love to do alternative documentation and have alternative programs for all of our customers. So I'm joined here today with our sales manager, Jose Gonzalez, with 27 years experience. Usually have him talk a little bit more about specific programs. And then during the show, I'll usually go over the general rates for today, as our partners have posted new rates for the morning, so we can check out all of the rates live. First, let me talk about a program we will go over later. So one of our most popular requests for conventional loans is the first-time home buyer 3% down. So these programs are going to be for first-time home buyers that qualify usually without as a true first-time home buyer or have not owned a primary in the last 3 years, can qualify for 3% down conventional. And Jose will show you a little bit more detailed quote on that here in a minute, where we can obviously break it down. For the quick quoter, we're not going to quote anything super fancy. We'll just check out the general rates. So Jose will go into a detailed breakdown here on our 3% down first-time homebuyer programs that we have under our conventional. So to get into the regular content for the show, let me go ahead and pull up the screen for the pricing tool. So this is our pricer at the Mortgage Calculator. This is for our mortgage professionals. So please get with one of our licensed mortgage loan officers if you would like to get a full quote and a full loan estimate. But this is a great tool for us to check out the pricing every day. So again, this is a tool for mortgage professionals. And we're just going to open it up today just to check out the general marketplace and some general programs that we have access to. So for our scenarios, we typically always go over an 80% LTV. So 20% down, 80% loan. We're typically always going to shoot for a 1-point buy down in this rate market where rates are a little bit higher. Most of our customers are asking to buy down the rate a tad bit, and usually they're getting some sort of concessions from the seller in order to help cover those costs, typically. So we'll use that for our example. We're going to start with our conforming conventional purchase 30-year fixed for a primary home, single family. And for all of our examples, we use Florida and Miami-Dade, which is where our office is based. We're going to use a 760 FICO and a 40 DTI for all of our examples here as well. So we're going to set up all these basic scenarios with this, and we'll go ahead and go through it. Again, as I mentioned, we're going to do 80 LTV. Jose will go through the first-time buyer options under the 97 LTV program shortly and talk a little bit more about the things that are needed for that. But let's go ahead and click Show Rates, and now we can check out our conforming rates. So these Home Ready are great programs. You must qualify for those, usually a first-time home buyer or under an area median income for these. So let's go ahead and roll down to our standard programs instead of Home Ready. And it looks like right here is our first one that's a standard agency program. So our rates this morning, a little bit less than yesterday. Remember yesterday's show, the rates were a tad bit higher. Today, rates have gone down a little bit. So that's awesome. That's why we love to do the show. So right now, a rate for a 1 point in discount looks like we have a 6.125 rate here. Looks like the next best one for another conforming program would be 6.25 for 1 point. So this would be the best combo for a standard conforming purchase at today's pricing. So again, the pricing fluctuates with the markets. We've seen a lot of volatility. Jose can talk a little bit more about that in detail. But basically, we want to do this show every day to check out these pricing changes. And it looks like today, the rates are a little bit lower than they were yesterday, which yesterday was a little bit higher than the day before. So that's why we love to do this show and show everybody the real life scenarios. Now let's go through here and show up a couple different scenarios as well. We'll go back to the quick pricer, pull up 80 LTV again, and we have other loan types. So we always want to check out our other programs. Again, here at the Mortgage Calculator, we specialize in all these loans. So if someone doesn't qualify for conforming, typically the next best option will be our FHA program. So we'll go ahead and price that. Remember, we do have VA available. We're not going to go through that today. That is only for our armed service veterans that do qualify. So if you do qualify, that is awesome. We can quote that instantly, but not everybody qualifies and not everybody has served, and we appreciate y'all. For USDA, your property must qualify. So if you're searching for a property in a USDA area, rural area that might be eligible for USDA, please get with us and we can price that. Otherwise, it's not eligible for most programs, so we won't do that today. So typically our options for most standard properties are conforming. If someone doesn't qualify for that, we're going to go to FHA. And if for some reason someone doesn't qualify for FHA, what we love here at the Mortgage Calculator is our non-QM programs, aka expanded guidelines, which go beyond that. So we'll get into that here shortly. For now, next best besides conforming will be FHA programs, 80 LTV, 1 point buy down. Everything else will stay the same that we just did. And let's go ahead and check out what the market is doing today. So you see here, I believe this is a little less than yesterday, but it doesn't look like FHA has moved as much as the conventional. But you see here, our best combo here for this is a 5.5% rate for a little bit less than 1 point buy down. You can have a little bit higher rate here under this program. So various programs, they're all around 5.5. One thing to key in on FHA for everybody is there are additional costs involved with monthly mortgage insurance. So make sure you key in on the APR because there are some extra costs for FHA because the government does insure these loans and allows us to do loans for people who may not qualify for the conventional loans and need a higher DTI limit. So now if someone does not qualify for FHA, what do we do? That is where the Mortgage Calculator specializes. So if someone doesn't quite qualify for conforming and they still can't quite qualify for FHA, we have our amazing non-QM or expanded guidelines options. So we'll go ahead and click this, and that will show our alternative income. So everything else will stay the same, 30-year fixed, primary purchase, but we can come over here to income verification, and we can use some alternative options. So we have full doc, which is what the standard loans that you're used to for conventional FHA, all that. But then we also have 1 year alt doc, 2 year alt doc, asset-based, bank statements, investor stuff we'll get into in a minute, and personal bank statements, which is our most popular request. So I'll do this today because we do this every day. Our most popular non-QM program are our 12-month personal bank statement programs for our self-employed borrowers. So these are our most popular requests. We will use 12 months of bank statements to determine a debt-to-income ratio here. And typically we can use those and determine a better debt-to-income ratio or qualify the customer using those bank statements easier than doing a full doc. So customers who may not otherwise qualify can use this to then qualify. Remember, they must be self-employed. But let's go ahead and click this, and we should get some options here for our bank statements. So you see every different program has a little bit different nomenclature. So some are called portfolio, some are called alt doc, but we see we have a few different options here from 725 for a little bit higher in discount to for exactly 1 point in discount, a 8125 for a little bit less than 1 in discount, at 8375, and we have a whole plethora of these programs available. So you can see there's dozens different non-QM programs. Every one of these is a little bit special. Remember, with conforming, everything's pretty much the same. With non-QM and these programs, everyone's a little bit different. So if you have a credit event such as a foreclosure or a bankruptcy, some of these programs, maybe at the higher end up here in the 9.5, would still allow you to purchase a home with one of those credit type events. So some of these programs are special. Just make sure to get with one of our licensed loan officers that can navigate you through all these dozens of programs to find you one where you qualify for the best rates and terms. Let me get back to the quick pricer and pull up some options for investment properties. So we love to work with our investors. We love first-time investors as well as heavy investors that have hundreds of properties. We have options for everybody. Now let's check out on the quick pricer here an 80 LTV, 20% down, 80 loan purchase, just like we did with everything else. And remember, with investment, there's only conforming. And if you have non-QM like we do here, we have our expanded. FHA, VA, and USDA are not applicable for investment properties. So we'll go ahead and check out the conforming rates now, the conventional rates. Let's keep in mind that for conventional loans for investment properties, the GSEs have added some extreme loan level price adjustments, aka points. So you'll see here we have some relatively decent rates, but you'll see some massive amounts of points because of these adjustments that the GSEs, the government-sponsored entities, have added to our conventional programs for investment properties. So we don't really have a 1 point buy down option here. Looks like our best option is a 6.875 rate with 3.375 discount. You could go up a little bit in rate for a little bit less in discount. And you see here, here's probably the lowest discount rate option we have for a 7.125. So Some of our investors would be somewhere in there, but a lot of our investors don't want to pay that much down as discount points, right? So a lot of times we get investors that want to go to our non-QM programs, specifically in this market, because of these extra costs that come along with the conventional. So with the low rates come some extra costs, and of course you cannot vest in an LLC and some other restrictions that allow our investors to use our non-QM programs and prefer them compared to our conventional. So for our last demo here, we will pull up our non-QM options for an investment property purchase for 80 LTV, 20% down. And under income verification, we can obviously do all these different options for an investment property. But for the show today, I always want to show our best and most popular program, which is our investor DSCR. So for an investor that's looking to get an investment property, this is the best option because the investor DSCR doesn't even have to determine a debt to income ratio. There is no employment and no income. All we're going to use is the rental income from the property to determine if that property can support itself and cover its expenses essentially. For all of our non-QM investment properties, standard to have a prepayment penalty. We're going to always standard to 3 years, which is standard. You can have no prepayment if you prefer, but our standard pricing is going to come with 3 years. If you have no prepayment, it'll be a little bit more expensive. So for the pricing today, just for our scenario, most common request is a 3-year prepay penalty. And we'll go ahead and check out our options here for our DSCR. Remember, no income, no employment, instantly get these rental properties. And you can see the rates aren't that much different than the conventional. So the conventional was just over 7. This is obviously a little bit higher, but remember, no income, no employment, no documentation, and much less in discount points. So we typically see our investors leaning heavily towards the non-QM options in this rate environment where the conventional options are there, but they're just a little bit different than maybe in the past, right? So our typical request is for these DSCR loans. That's our most common request here. And we can also do these for multi-unit properties. We can also do these for 5 to 8 units. We can also do these for mixed-use properties. And of course, we can do this for short-term rental properties, which is probably our most common request across the board. And you see here, we have dozens of programs again with these DSCR and specialty programs. Every one of these that you see here on the page of these dozens of programs is a specialty niche program. So make sure you get with our loan officers that can navigate you through here and figure out which DSCR program is right for you. Now, let me go ahead and pull up what we'll talk about today with Jose for a second. So let me just go ahead and pull up his example here, and then I'm going to pass it over to Jose. All right, I got your sample loaded up. Let me swap you in here. So Jose, why don't you go ahead and take over and talk a little bit more about our specific programs for first-time home buyers and the 3% down, because in the pricer we can't really pull that up. So why don't you explain a little bit more of the ins and outs of how someone can get a 3% down, which is what everybody obviously wants when we put it out there.
I'm not seeing the graph of the quote.
All
right, beautiful. Got it. Beautiful. All right. So a lot of options that we have, as Nick likes to say, a plethora of products that we have in the mortgage calculator stable. Now, this is one, the first-time home buyer, home ready option. This is an option that as long as you are within a couple of caveats here, you either have to be 80% of the HUD median income for an area, or it has to be a low to moderate income census tract. So you can run that through the Home Ready and Home Possible. It's either Fannie or Freddie, Home Ready, Home Possible. You can run it through the geocoder, run the address, and see if it is in a low to moderate income census tract, because then there is no income limitation, right? So very good option. And of course, first-time home buyer, which is an individual that has not owned a property within the last 3 years, and obviously currently does not own a property, any property, even if it's a property they have rented, they cannot own any properties. They have to be first-time home buyer. So this product does offer the benefits of reduced mortgage insurance. So the mortgage insurance is less expensive, and also reduced interest rates. As you can see, from the rates that we have there, 6.5 is at par. And then after that, 6.125 is costing 1 point. 5.75 is costing roughly 2 points, and 5.625. They really, if you really want that 5.625, I think it's sort of a prohibitive cost there because it's almost an additional full point. It's like 3/4 of a point just to get that 0.125 benefit, which reduces your payment by $38. So at that point, it could be a case of diminishing returns for the benefit, but obviously we put it out there and we let the borrower know how long it's going to take them to recoup that initial buy down to see if the extra cost is worth it to them. But again, if you compare this to the regular conventional rates, much better. I yesterday I was pricing out a conventional purchase, and I believe that 6.5 was costing roughly almost a point. So you see the benefit of the first time home buyer program. So a recap: benefits are 3% down payment, reduced interest rates, and lower MI. So it is a win-win-win situation for the borrowers. As you
Here's the
see, the
PMI
MI
highlighted here.
in
That's the
this,
lower
yeah, in
value
this,
one.
yes, sir, for a 3% down, $109 is very low. But again, when I did opt for that MI payment, I did code it as Home Possible and Home Ready program, and then it does give the reduced MI. It's probably like 30-40% lower than the regular MI. So this is a really good product to compete. However, when you are looking for this product, you can easily slip and not click first time home buyer, and you will not get any of these options, and you would never know they even exist unless you do a proper search for a first time home buyer. So again, very good I mean, a lot of times our MLOs and our borrowers are looking at FHA for the loan down payment option, but this is a lower down payment. It's going to be a lower mortgage insurance as well, because if we do this scenario here for $485,000, right, as an FHA loan, it is substantially higher. It is $343.54 would be the
The MI.
FHA mortgage insurance, and that doesn't include the additional impact of the upfront mortgage insurance premium, which is going to add again 1.75 to the loan balance. So besides having the higher MI by, more than double, 3 times the amount. It was $343 versus $109. You're also going to have $8,487.50 in upfront mortgage insurance premium that will be added to the balance of the loan and will also increase your monthly payment. So I'm not saying FHA is not a good option for borrowers that have to go that route. What I'm saying is, if you're looking for the down payment, the lowest down payment option and the lowest payment option, the 3% down will probably be that option. And throwing in an additional intrinsic benefit here is the fact that it is still a conventional loan versus an FHA loan. And if you're out there in the world of multiple offers and trying to compete to, for your borrower to snag that deal, possibly putting forth an offer financed by a conventional loan versus an FHA loan may allow them to compete more, because it is what it is, and there is a stigma associated with FHA loans, because in some cases there's a little bit more requirements on the appraisal side regarding property condition items, and just the mindset of sellers and listing agents in those hot markets. So again, when you are consulting, and we're all about consulting at the Mortgage Calculator, when you're consulting your borrowers, you want to give them those multiple pre-approvals. You want to pre-approve them for the FHA 3.5% down, pre-approve them for the first-time home buyer, put them side by side, and then also consult with your borrower's real estate agent and discuss local market conditions, tie it all in together to be able to give a good recommendation to your buyer slash borrower of what are their best options for their particular local market conditions. So that's a lot to consider, and something, I think, a detail that a lot of mortgage loan originators miss. They're looking so quick just to throw out that FHA pre-approval. They forget about what's going on in those local market conditions, which may render that FHA pre-approval hard to execute upon. So again, a lot of options. First-time home buyer, best rates.
Thank you, sir. So again, we went over our conventional 3% down options. As Jose said, FHA is 3.5% down. So these are some of our most requested options. You do have to be a first-time home buyer to get that 3% down option on the conventional. So please get with one of our licensed loan officers to do so. Let me pop myself nice and big here. So thanks everybody for joining us today. If you want to get with one of our loan officers to get a quote, or you can just go directly to the website and just sign up and we'll connect you with one. And we'll go ahead and get that quote out, as Jose presented the full quote within about 5 minutes. So go ahead and check out our website. You can reach us on our emails. Mine is Nick at the Mortgage Calculator. Jose is Jose at the Mortgage Calculator. And we look forward to helping everybody. Thanks for joining us today. Thanks, guys.
Thank you, everybody.